This video is sponsored by the great Courses Plus. According to Business Insider, American billionaires added $282 billion to their wealth during the coronavirus recession, all while at the same time, 22 million Americans filed for unemployment. This report creates two very different reactions in people. Many might see this report and feel anger that wealthy people keep getting wealthier while the majority are experiencing a financial crisis. Many others might be looking at this report with curiosity and ask themselves, what do these people do differently that allows them to create wealth in good times and in bad? First, we must understand that the $282 billion made during this crisis was not just cash that billionaires can put in their bank account. This wealth increase was due to the sharp growth in stock prices after the recent crash, and since most of these billionaires have large holdings in these companies, their wealth grows as their company stock grows in value. But to build wealth, you don't have to be a tech giant or build a big business. Many people have created massive levels of wealth without even starting or operating a business. For example, famous investor Warren Buffett is expected to receive over $600 million in dividends alone from just one of his investments, Coca-Cola. See, one of the most common traits that virtually all wealthy people have is that they are owners. Whether they start and operate their own company like Zach or Bezos, or just invested in those companies like Buffett or Dalio. Now, you don't have to be a billionaire or start the next Amazon in order to take a share of the world's wealth. For a few years, this guy, Tony Robbins, picked the brain of 50 of the best and wealthiest investors in the world to see just how they are able to create these levels of financial gain. Financial success can mean different things to different people. I mean, we're all different from each other, but there are three main categories of financial success that are important to keep in mind. First is financial security. Imagine being able to cover all of your living expenses all without ever having to work again. It is important to have this number because later in this video, we're going to calculate how to actually get there. For the sake of this video, let's say that your basic living expenses cost you around $30,000 per year. The goal to achieve financial security is to create an investment fund that will generate this amount of money every year after taxes. Once we do that, we will be financially secured. The next is financial freedom. Think about having your current lifestyle paid for, not just living expenses. This includes any vacations or trips that you take or fun experiences you normally like to have. For this video, let's say that this costs you around $45,000 per year. And lastly is total financial freedom. This is about having your lifestyle fully paid for and then some. This will allow you not only to support your lifestyle, but continue growing your wealth. Let's say that this number is $75,000 per year. Now that we have these numbers, let's move on to how to achieve these financial goals. Here's where we enter the accumulation phase. Imagine your financial journey as climbing a big snow mountain. You will have to work and put in the effort into climbing this mountain, but once you reach the top, your work is done and now you can slide and enjoy your financial freedom. What we have to do in order to get there is figure out how high the top of the mountain is. This is our accumulation goal. How much money do we need for us to be financially free the rest of our lives? This is where we use Tony's financial freedom formula. But before we do, take a guess on how much money do you need in order to achieve financial security, freedom, or total freedom. Remember, this is for the rest of your life. Got it? Is it a few million, 5, 10, 20, 100 million? As you will see, the number might not be as high as you probably think. Let's get started with our financial security. Tony says that to have money for virtually as long as you live, we must multiply, in this case your monthly living expenses, by 12 to get your yearly cost. Then multiply this number by 20. Using our previous example, we had a living cost to be $30,000 per year. This means that we multiply $30,000 times 20 and we get our accumulation target to achieve financial security, which in this case is $600,000. For our financial freedom, we have $45,000 multiplied by 20, so we get $900,000 as our target for financial freedom. For our total financial freedom, we multiply our $75,000 by 20 and we get our target of $1.5 million. Now, you might be asking, Mr. Betterment Project, why do we multiply our yearly expenses by 20? Wouldn't that just last us 20 years? And in simple terms, yeah, But we will take advantage of financial assets to first get to our goals faster than just saving, and second, have our money last longer than 20 years, virtually the rest of our lives. In the accumulation phase, we use our money and the returns of our money to compound until we get to our goal. Once at the top, we use the returns of our investment to pay for our lifestyle. So let's say that we got to our financial freedom goal. Here we have $900,000 invested. Let's say that we have a conservative return of 7% in our investments. This means that our $900,000 will provide a $63,000 return. After paying taxes, you will have roughly $45,000 that will pay for your lifestyle. Notice that this strategy only uses the returns that our money produces and not the principal. This is why we say that this will last virtually the rest of your life. You will not spend any of your $900,000, only the interest and returns this money produces. We want to keep our principal intact so it can continue producing income virtually forever. Now, I know what you're probably thinking. Isn't investing risky? And the answer is yes. There are risks involved in investing. There are market crashes and there are recessions, just as there are bull markets and economic growth. The goal is to allocate our assets where our money can thrive in any economic weather. Fortunately for us, this guy, Ray Dalio, investor who manages the largest hedge fund in the world with over $160 billion under management, broke down exactly how to allocate our investments to make money in any financial condition. Now, in order to be able to make money in any economic climate, or at the very least, lower your risk of losing money, we must understand the 4 different economic climates. There are 2 main parts that determine the changes in the economy: growth and inflation. This can be represented by using this chart. There are times of economic growth when inflation happens. There are also times of economic decline when deflation happens. In order to create a virtually risk-free portfolio, we must understand what assets do well in each economic climate. When we see economic growth, stocks, bonds, and commodities like gold tend to increase in value. When there's inflation growth, in other words, the value of the dollar decreases, commodities like gold help combat the devaluation of the dollar. Now, when the economy declines, things like government bonds or inflation-linked bonds tend to do well and increase in value. And when inflation decreases, in other words, the value of the dollar increases, things like stocks, equities, and, well, cash tend to do well in this economic climate. In order to make this asset allocation effective in giving you returns as well as protecting you from any losses, Dalio allocates his money to have 25% of his risk in each quadrant. This way, in case of an economic downturn, the other categories will balance the losses. Dalio says to allocate 25% risk in each category. Most people think to allocate 25% of the money on each of these categories, but percentage of money doesn't equal percentage of risk. As Dalio says, equities like stocks are 3 times riskier than other assets. So if we have 60% stocks and 40% other asset classes, we're actually creating an imbalance of risk where 90% of the risk is placed in the equity quadrant. Lucky for us, Dalio gave Tony his exact asset allocation strategy to create growth and virtually eliminate risk, which he calls the all-weather portfolio. To the shock of many people, Dalio's all-weather portfolio has only 30% of his assets invested in equities, like stocks, since they are the most volatile. 40% goes to long-term bonds since they are more stable, and 15% of his assets is in intermediate-term bonds. He has another 7.5% in gold and another 7.5% in commodities to help combat inflation, but still keeping their percentage low for their historical volatility. By incorporating all of these asset classes into your investment portfolio, we are creating an environment where our money can grow while protecting ourselves from losses in any economic climate without trying to predict where the market or the economy is headed. Backtesting the all-weather portfolio reveals that it does generally live up to its name. This strategy has produced a return of just under 10% per year and made money 85% of the time over the last 30 years. And the average loss was just under 2%, not 40 or 50 like in many market crashes. Now, of course, make sure to consult with a financial planner to navigate your financial investments. This video is for educational purposes only. This video is based on Tony Robbins' book, Money Master the Game, which I highly recommend. I know that many of you are starting to invest or thinking about investing, but this can be a little scary if you don't have the right knowledge. This is why I am so excited to partner with the Great Courses Plus as the sponsor of this video to give you guys a free trial of their online learning service subscription. The Great Courses Plus is known as the Netflix of learning because you get to learn skills from a variety of different categories, from finance, economics, and history to science, photography, and filmmaking. If you're like me and love learning about different topics and always like to bring value in any conversation, the Great Courses Plus is a great place to be since they have over 11,000 video lectures on a variety of topics. And you can even take it with you anywhere you go podcast style with their mobile app. There are two main courses I would recommend with your free trial to learn more about investing. The first one is How the Stock Market Works, where you learn in simple terms how the stock market works and how to make it work for you to build sustainable wealth. This is a course that I'm currently taking and it is well worth it. The second course I recommend is Financial Literacy, where you have a broader understanding of personal finance by learning the different elements that affect it. Now, the best thing about the Great Courses Plus is that their courses are taught by world-class experts in their field. For example, the course that I'm currently taking on understanding the stock market is taught by award-winning finance professor Raymond DeGennaro, or this travel photography course that I'll be taking next is taught by Bob Chris, which has been a National Geographic photographer for over 30 years. So you'd be learning from the best of the best. So to get access to your free trial of the Great Courses Plus, go to thegreatcoursesplus.com/thebettermanproject or click on the first link in the description of this video. And if you know someone that loves learning new things, you can now give the Great Courses Plus as a gift to someone who loves learning. So to start your free trial, go to this URL or click in the link in the description of this video and start your journey to knowledge with the Great Courses Plus. And as always, thank you for watching, and I will see you in the next video.